Tube students, welcome, welcome, welcome. So I wanted to make a quick video about prop firms, okay? How to pass them pretty well. Um, as you know, and if you're in my Discord, you know already. If you're not in my Discord, maybe you don't know. We trade supply and demand on multiple time frames, but we trade it in the morning on the M5. So we try to get M5 setups for AU, GU, NU, EU, UJ, NAS 100, US 30. I don't usually do it on the other ones. I could do Canada, but that's too many pairs. I try to focus and zero in on the actual US news. Because if you understand where the dollar is going, then you know most of the other ones are going to follow suit. So I'll look for a setup that fits that. So I want to show you this setup. You see this set? I'm gonna show you what supply and demand is. Yeah, just a quick synopsis. So you see this move that pushed up like this. The reason why that move pushed up right there is because I'm a put it like this. That last bear candle. Can you see it? You see that last bear candle? That was the last supply, right? So let's do this. We'll put a box between there and there. That is our demand. Well, I'm saying supply. That is our demand area. How do we know it's a demand area? When it came right here, it pushed all the way up and stopped right here. Right? Obviously, this is. I'm just giving you a small synopsis of it. There's more to it because there was a higher time frame demand anyway. But those are the great ones because you just go to M5 and catch it. But anywho, our foundation, if you don't know, step one, we have you have a gap area. You see the gap between these two wicks? That is called a fair market or fair value gap. So we put the FVG right there. That's your first foundation of looking at your setup. So you got, well, actually, number one is the demand. Number two is the fair value gap after the big push down. Push up. So let's just say you didn't see any of this. You should already have an automatic system of, okay, the market wants to fill in this gap, and look below the gap, there's a demand. So I want to wait for the gap to be filled, and I wanted it to come down to the demand. And when it comes down to demand, I need to see some bullish behavior, and then I take the trade. Now, as you can see, the market made this big push up. It came down, it played games, and it came back down, filled the gap in, and came down to the demand. And this was the last candle, was this one. That's the last, and it made a new demand right there, honestly. So let's just say it came down to your demand. The gap is filled. It had to come down. There's a demand. How do you get in these trades? My perfect, it's not perfect, but it's the best way is, where's the candle that rejected the demand? Actually, it was this one. Let me point it out to you. This was the rejection candle right here. Do you see that candle? That was the rejection candle. All right. So what I want is really simple. As soon as the market comes and breaks above that rejection candle, which is that wick above that, I'm in the trade. And I'm calculating from there to down here, that's about 9 pips, or you can make it 8 pips. So 8 pips stop loss will be right there. And I'm targeting this high, which you see it came out and took the high out eventually. This is a 1 to 3. Took some time, but it tagged out and went up there and hit TP. So I got in right there, and look, it pushed down a little bit, never went to our stop loss, pushed back up, made another gap. So imagine we didn't see all this. So you got these candles that made no wicks. So from right there to the zone, the new zone. That's right there. You see this? I'm gonna make it a different color so you can see. Maybe there you go. So it pushed up, and I knew, this is kind of more advanced, but it's okay. You can learn the advance because you're already in the position anyway. So it came back up. It needed to fill that gap in. It came and filled the gap in, tapped the new zone. When it's a long candle tap, I don't pay attention to those. Is this one, the one that turned green? Um, Let me highlight it for you. This is the rejection candle. As soon as the rejection candle, as soon as a candle comes and break it, not close it, break it, that's when you get in. So now you got two positions that you could have got in on this move. And from there, you can make it that one about 8, 9 pips too. So now you're risking 2% on this trade, and it's the same area. So this trade is 2.5 RR. The other one's 3.5 RR. So that's 3, 4, 5, almost 5.5% gain off of one M5 setup. So if you had your prop firm account and you were trading like this, 8 pip stop loss. What is this? Let's see how many pips this is. From here to here, that's about 25 pips. And this one's about that point. Somewhere in the same range of 25, whatever, a little bit less or more, whatever. So now you got two moves that just gave you 5.5 R. Now, this is how I started to trade. And when I started to trade like this, I started to pass prop firms easily. At first, it's very mental because it's 8 pips. It can hit that stop loss and you could be down 2%. But 2% is not bad. You can come back from it. There's plans of coming back, and I'm gonna talk about that in a second. But when you have a good setup like this, and now you up 5.6 R for the week, the rest of your trades you could just risk 0.5% now for the rest of the week because you up 5%. Don't get greedy. 5% for the week is absolutely astonishing. I mean, not astonishing, wrong word. Absolutely great. You know what I'm saying? Now you're up and you can start risking half for the rest of the week. Now, if you're live and you take something like this, you have 5R. 100K account, that's a $5,000 or a little bit over $5,000 trade with a 100K prop firm account. The mental part is the part where that hurts these setups because it can come down there and tap it. But if you follow the rules and just let the trade play out, put the trade in and walk away and let the trade play out for the day, you'll be fine because we're following a system. The system is the demand, the fair market gap that need to be filled, tap of the candle, rejection candle, take the break of the candle, and just walk away. The part where we mess up is mental. We won't do this. But I'm getting it down where I'm mentally doing this now, and the results are wonderful. So I'm slowly trying to take it to the next level. And you got to be, you just be patient with yourself, and you'll get it. And you can find these setups everywhere. So even we'll show you a sell position. I'll show buys, but you also got to show sales. UJ has a lot of sales on it. UJ is a seller sometimes. Let's find a really good one. Here's one right here. The last candle that was bullish was that one. Supply. So that's the supply zone right there. And I kind of cover up all of the wicks sometimes too, because that's just what I do. So I cover up all the wicks over the whole thing because I bet you this is the M15 move too. So we have fair market gap from that wick down to that wick. So you knew that price need to come and fill in the gap. And that's exactly what it did. It filled the gap in, and there's the break of candle That's the rejection candle. The break of the candle would have been right there. That would have been your entry. So you would have shorted it right here and then got you a, let's see, 8. Well, this is UJ, so 8 pips is not a lot. But let's just say you did. I'll do like 10, sometimes 15. So there's 10 pips right there. You get whatever lot size you need for 10 pips. And remember, we're coming to take out the lows because we're on a sale. There's the lows that need to be taken out. And voila. You hit the lows, you got a 4.55 RR setup if you put the right lot size in. That's the important thing. Put the right lot size in. So this needs to be risk 1% in order to get 4.55 R for this move. And as you can see, it's on a downtrend. So it exactly did what it needed to do. Right here is a break and retest support and resistance trade right there. So put support and resistance traders saw this break, then there's the retest, and then there's a sell candle. They got in and they got the move too. So it's trading like this is universal. Just because support and resistance also works, but you got to know what you're doing. And support and resistance work well with me now, knowing about supply and demand also. So if I would have saw this, I'd be like, there's a support and resistance setup. I would have added some more positions right there. And now we got more moves. Now, is this system 100%? No. No system is 100%. Every trader should understand that every trading system is not 100%. Some are more accurate than others. That is definitely a thing. But however, every trading style is not 100%, and it's not a religion. So I can't sit here and say that this one's wrong and this one's right. And you can't even say that for religion either. So, anyways, but with my setup that I teach the Discord and I give the setups for, this is what we do every week. We catch setups like this. And we just keep it simple. Put the trade in, fall in love with your stop loss, fall in love with your take profit, and be okay when it hits either or, and you'll be successful. And that might take a psychological breakdown, but if you do things in systems, it kind of beats psychology. So I would tell you to start off with a $5,000 account from my forex funds and just take these. So like something like this would have been a 0.50 or 0.50 lot size, or a 0.50 or 0.60 lot size for this move, and you would have made all that money. So this probably would have been like $250 or something on your, whatever. And we be patient, and these setups, supply and demand works better when there's volume in the market. So when the market is trending, that's why we trade during New York session around 6 o'clock a.m. Central to somewhere around 10 o'clock or 10:30 a.m. Central. After that, the market volume start going down. The supply and demand setups start acting weird. So you got to catch that. This move happen, and then it just probably for the whole session stayed like this, and then the next session start pulling up. And then if you add this with London highs and London lows and New York highs and lows, and the highs and lows have supply and demand areas on it, then you one bad mamma jamma. Trust me. So this is for me the best way that I can explain how to pass prop firms, which is scalp. It's a scalp setup pretty much. This is like, if you, let's just say you got it airtight, just put it below above the highs, which sometimes I do that. Above the highs, that's a 7R. It never stopped, took you out of trade. That's 6.5R or 7R right there. You can literally put twin trade this and pass a prop firm challenge. And I mean, if it stops you out in both positions, yeah, you'll be down 2%, but you could come back from 2%. When you get down, I have my plan, and this is the last thing I'm gonna talk about. My plan when I'm down and in drawdown is to reduce the lot sizes and patiently build it back up to break even. And when you build it back up to break even, take a deep breath, and start risking 1% again. That's the thing. But the part that's gonna make you not do that is the actual psychology behind that. Now I'm looking at this, it made a low. So remember how and this is the last illustration. You know how when the market goes, how you do this? It goes down, pull. So it went down, pull back. Here's the supply right here, and then lower low. If you were anticipating a lower low from this situation, you could have literally took the whole move. And you'll have to go and see where the demand is at. Look, there's an M5 demand right there. I already know just by trading the market, and it never really hit it. So you would have lost that. So I'm trying to figure out what made it turn around. Let's see. It looks like that's a tap. So that's a demand right there. Did it hit it? It tapped it. Okay. So it did tap that demand. That's a bigger demand right there. So let's say you went for that demand. It went all the way down to that demand and you could have had a 10R. A lot of traders are starting to take these 5 to 10R moves. Now, if you would have twin traded this, the least that you would have lost was 2%. But 2% for 20%, I'm all for that. After that, I'm done with the market for the rest of the week. I ain't even got to trade after that. 20% on a prop firm account, you're you're blessed by God. Let's just put it that way. You're blessed by God if you do that. So that's my little spiel on um supply and demand works. Whatever you use and works. See, it came right back and gave you another move. Then it finally broke the zone or wicked it and went down some more and then broke it. You supply and demand zones, they're beautiful. But yeah, that's what I feel about the prop firm accounts. If you're trying to swing trade or enter trade, it's gonna take too long. But if you do it the scalping way with supply and demand, and you get a trade like this in one day, one of them would have passed the challenge. And I feel like with supply and demand, just because I mean that's just my personal opinion, you'll get these setups like this, and you'll pass the prop firm account. I'm not telling you to pass it early, but you do want 1 to 3s, 3 Rs, 4 Rs. It's cool. I mean, I like 1 to 1s. I fell in love with 1 to 1s because it's profit. But you definitely want to get to a point where you're putting the right lot size in, not cheating yourself out, not over trading, you know, bringing problems to the charts. If you're having those problems, take a step back. The best advice, and I'm gonna end this short. The best advice if you're still struggling with trading, even though you have a system that works, is to get disciplined. Put 200 to like $100 to $200 into your account. Get disciplined, and go back to taking micro lot size trades. Take the micro lot size trades with these type of setups. So this would have been 0.01 and let it tag it. That way you won't be afraid if it hits stop loss. It's a micro lot. You don't care. And get used to taking these trades and earning a teensy bits of money off of it. And when you get used to that, then go, just go at steps. No more micro lot, then do 0.05, then do 0.10, then do 0.20 until you work it up to where you're taking a standard. And obviously your account can take a standard, but maybe you have to go down that route. That might be a step that a lot of us have skipped, and that's why we're not profitable. Go ahead, pop in $100 into account and put micro lots in these setups, and do this for a while until you get comfortable. And now you're comfortable and you made some little baby money off of it. Then up in your lot size slowly until you can put these trades in and walk away from the chart and be okay with the result. That step cannot be skipped. Some people have skipped it, but if you've been trading for a long time, you got a winning setup and it's not working out for you, that's what you need to do. That's what's going to fix the situation. And also obviously looking in your life and seeing what's going on and fix some stuff around you. Clear some stuff around you, clean up your room, get a better job, have some more positive people around you, have some motivation. If you're into religion, get deeper into your religion, pray. Pray over this stuff. Find what it is that's causing you not to put in. You got a 10K prop firm account and you still over here putting point 10 in trying to get a move, and they make the whole move and it ain't even 1%. Find out why you can't just put the right lot size in this and get this whole 7R move. There's something in the way, and guess what? You can get it out of the way. Look at that beautiful support and resistance setup right here. Y'all be thinking support and resistance don't work no more. I'm here to tell y'all, support and resistance still work. You just got to know when to use it. So this is a support and resistance setup. You broke it, retest it, and you could have just took the retest right there. So you could have got in right there at the break, and you would have took the and been out, and then you could have got back in again right here. Once it tapped it again, I would have got right in aggressive. Support and resistance still work. And as you can see, this is how you know support. Sharp moves. Sharp move, sharp move. That's the support. And then sharp move. Support and resistance still works. So don't think that other trading style that you were doing in IML don't work. This just IML wasn't doing a good job. And the energy that came from IML was to recruit, 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 recruit. The energy wasn't put into learning how to trade, learn how to trade. No, no, no. The energy was in recruiting. That's why a lot of IML teachers and a lot of IML students came out not knowing how to trade. And there's been a big pitfall on them because your energy was into recruiting and not learning how to actually trade. That's the problem with it. Other than that, man, look, we're gonna have a good week this week. I didn't really see some good setup this week. I mean, today it was some, but I was too busy. Um, and I overslept, but it is what it is. We're gonna get our profit and everything for the week. So I'll catch you guys up on the next video. Have a good, blessed week. Peace.